So very warm welcome to everyone in this another market outlook video from GEPL Capital. I'm Sanket Bendre from Research Desk. We'll be sharing you market outlook, what exactly happened in the past few weeks, and what should we expect in the upcoming weeks. So let me share my screen and share the presentation with you. So in this slide, we can see the key updates from that happened in the past 2 weeks. So the first highlight was that the India's retail inflation dipped to 3.16% in the month of April, which was lower than the expectation of approximately 3.27% and lower than the March months of 3.34%. This was the sixth consecutive month fall in the inflation. So this is a very key positive indication that the inflation rate in India has been decreasing over the past 6 months. This was primarily due to the decline in food inflation. Another positive highlight, and we might see another rate cut from RBI in the upcoming June meet of approximately 25 basis point, and this will be a very positive sign for the entire market. So the next update is that the US Fed has kept the key benchmark interest rate unchanged in the range of 4.25% to 4.5%, and has flagged rising risk of the economy resulting from the Donald Trump's aggressive tariff stance. So we might see a 25 basis point of interest rate decline in the US market, as US Fed has said that the risk from the tariff may impact the US economy given the rise in inflation from this tariff hikes. So negative indication, as we might see that the interest rate in the US economy might remain stagnant, and we might see a 25 basis point of rate cut in the entire FY 2025. So a kind of negative indication from the US market. Another negative indication is that the Moody's have downgraded the US credit rating from the top tier AAA to AA1, citing a sharp rise in government debt and interest payment ratios, which now exceed those of similarly rated sovereigns. So we saw that as a result of this, the bond market saw a very positive sign as the bond yields increased, and as a result of that, we also saw that FIS outflow from the US Indian market, as investors were fledging from the Indian market to a more stable stance in the US bond yield. The next update is that the BSE has announced that the IndusInd Bank and Nestle India will be dropped from the Sensex and replaced by Trent and Bharat Electronics. So this rejig in the Sensex will be carried out in June 23rd of 2025. So this indication from the BSE indicates that the IndusInd Bank and Nestle India has been poor performer in the BSE Sensex. So after a good rally over the past 2 to 3 weeks, we are seeing the main board IPOs is seeing a revival with the improvement in the markets post the tariff and uncertainties and the Indian-Pakistan tensions. So upcoming IPOs include Aegis OPac Terminals, Close Bangalore, Prostam Infosystem, and Skoda Tubes. In this week, we saw that two of the IPOs, Borana Views and Belrise Industries, were started, and we will be seeing the listing in the next week. So as Borana Views has seen a good retail investment opportunities, and we might see a good listing gains from the Borana Views IPO. In the next slide, we can see the macro and equity market outlook. So these charts have been presented by Bloomberg and Standard Chartered. So as we can see, in this chart, that the GDP growth of India has been estimated at approximately 6.3% to 6.5% over the upcoming 3 years, which indicates that this is very positive in terms of the GDP growth rate of China, which is approximately 4 to 5%, and about the estimates of other countries such as US, which have a GDP growth of approximately 2 to 3%. So this showcases that in the emerging market, India still remains at the top, and we might see a good investment from FIs in the upcoming years, given the GDP growth rate of India is expected to be about 6%. In the next chart, we can see that the inflation rate of India is expected to be range bound between 4.1% to 4.5% over the upcoming 2 years, indicating that inflation is expected to remain stagnant, and we might see rate cuts as government will be focusing on improving the economy. Given there is a slight slowdown, and we are seeing earnings in the fourth quarter slightly weak. So in the upcoming quarters, in the upcoming years, I would say, the earning expectations for the Nifty 50 companies is expected to remain strong, which is estimated. So in FY25, the EPS is expected to be 8, whereas in FY26 it is expected to be 9, and in FY27 it is expected to be at 12. This indicates approximately 11% CAGR growth for the EPS over the next 3 years, indicating a positive stance for given, as I mentioned, the GDP is strong for India in the upcoming 2 to 3 years, and as a result of this, we can see that the EPS that the companies will be posting should improve over the upcoming years, despite a weak performance in FY 2024, and we might see a weak performance in over the next 2 to 3 quarters. So, what are the key takeaways from this market? So, although the market volatility may persist in the near term, the risk to reward outlook for domestic equities remains attractive. This should be supported by the falling domestic bond yields and the potential for India to be among the first countries to secure a trade deal with the US. So this US tariff uncertainty still lingers on India's head. However, it is expected that there should be a trade deal which should be cut out in the upcoming weeks, and it will be a very positive news if the BTA agreement has been signed between India and US, as we saw that India and UK had done a free trade agreement. So, and it was a very positive news for India as well as for UK. The next key takeaway includes that the RBI policy easing, active liquidity management, and favorable bond demand supply balance is likely to drive bond yields lower, which will be a positive outlook for our equity markets. So in this current environment, we are recommending an investment strategy to focus on staying invested in the fundamentally strong stocks, and every market dip should be viewed as an opportunity to add on and accumulate quality stocks which have long-term growth potential, and it should enable our wealth creation over time. So it will be a key positive for us if we get a good opportunity in the market to invest in and average out our stock portfolio. So that's all from this video. So do like, share, and subscribe our GEPL Capital videos, and do share and subscribe our GEPL Capital channel. So thank you everyone for watching this video.